Hello guys, welcome to my channel. This is the second part of supply and demand, where I will explain the main concepts of supply and demand and how you draw the zones and my main setups for my tradings. Before we start this video, please don't forget to subscribe to the channel and let's start it. Before we start about the main concept of supply and demand, you guys need to decide what type of trader you want to be or how much time that you have per day for trading. If you are a person who likes to enter and exit your trades really quickly, you should choose small time frames like 1 hour, 50 minutes, 5 minutes for your trade analysis. If you are a person more like me that don't have that much time to sit all day in front of your computer, you should choose bigger time frames like 1 day, 4 hours, 1 hour for your trading plan. If you are a person who likes to invest long term, then you should choose bigger time frames like 1 month, 1 week, or at least 1 day. After you decide what type of trader you want to be, then your trading plan should go through the respective time frames. For example, if you want to be a scalper, your position analysis should be focused in 1 hour, your trend analysis should be focused in 50 minutes, and your entry should be focused in 5 minutes time frame. In my case, I'm more about day trading, so my position is focused in 1 day, my trend analysis is focused in 4-hour time frame, and my entry is 1 hour or 30 minutes. So after this, let's jump to supply and demand. About supply and demand. So basically, supply and demand are zones where the banks and the institutional players looking for sell and buys. The supply zone is created because of banks and institutional players didn't get all their positions filled. As we can see at this chart, banks tried to push down the price for the first time, but they didn't get all their position filled, so they need more position, more lots. Then they will just push up the price and sell right here for the better price, then push down the price. For the demand zone is the opposite. They will just try to push up the price, then after they will just fill the rest of their position when the price comes down, and after that they will just push up the price. About supply zones, they can be formed in two ways: rally-based drop and drop-based drop. Basically, rally means that price just go up. Base is where the price stays stationary over there, and the final drop is when price got pushed down. And drop-based drop is price pushing down. After they will just consolidate a little bit, then the price will just go push down. For the demand zones, we have the opposite: drop-based rally and rally-based rally. In drop-based rally, basically the price just got pushed down, and after they will just consolidate a little bit, then the price just got pushed up. And in the rally-based rally, the price got pushed up. Then we have a small time of consolidation. Then after, the price will just go up. To draw the zones, we have 3 ways to draw it. The first type of drawing is what I use for my tradings, where the top limit of the zone is formed based on the candle's high, and the lowest limit is formed based on the lowest candle body in the base formation. For the second type, we have our lower limits. Instead of in our body, we have just in our wicks. For the third type, we, instead of using our body or our wicks, we are using the upper shadow before we touching the body. And the final note, this entry doesn't mean that you should enter after this just break this zone. It means that you need to wait for the retests, and after you just enter for a sell position. For the demand zones, we have the similar ways to draw the zones, where our top limit is in our body or on the wicks or at the lower shadow too. Before we jump to the trading view, let me just say about pros and cons for each method. The first one, we have a good entry point and good risk reward. And compared the first one to the third one, we can just realize that the risk reward of the third one is way bigger than the other one. But it's really difficult to enter right here. And for the second one, most of the time you will get filled, your position will get filled, but your risk reward is way lower than the other one. Each one of them has their pros, so just choose accordingly to your trading style. Now just let's jump to the trading view. Now let's take a look on GBPUSD example on the daily time frame. I started to draw some supply zones and some demand zones. This supply zone, I choose this supply zone because it's the most recent supply zone that the price doesn't touch there. You can draw this one, but this one has a long wick over here. I don't like this type of supply zone. So I just choose this one above. Then for the demand zone, I just choose the lowest demand zone that I can see. For the position analysis, if we divide this section by 3, we'll get a high position over here, a medium position over here, and a low position over here. For my setups, at high position, I'm only looking for shorts, and at low position, I only looking for buys. Right now, we are at high position, so I'm looking for shorts. I will try to find at lower time frame one supply zone inside this area to get my short position. At 1 hour time frame, right now I'm looking for the price come to this zone, the high time frame supply, and just has some action over here that can push the price down and creates a supply level over here. And after the supply level is created, I will just enter a short position. Let's see how the price moves. For now, all right. So here, as you can see, we have a supply zone that we can just put a limit order over here, a short limit order, a stop loss above this wick, this zone. So go for short over here and aim at least here or 2 for 1 as you like. So just wait for the retest right now. And we got our retest over here. After the retest, just watch the price. Okay. Yeah, we got our first take profits. Our last take profit should be the high time frame demand. So if you guys aim for that type of target, you will get 15 to 1 risk to reward. But take some profits all the way along the target because you never know what happens to the price. So let's see how this trade works. So for this trade, at the end of this trade, you could put something around 9 to 1 risk reward ratio. So it's a really good profit over here. I hope you guys enjoy this video. Subscribe for more updates and see you next time.